Good morning. Welcome, everybody, to another Wednesday edition of the Credit Spreads Options Training. I've got Greg with me. Greg getting his screen ready. Can I get a quick mic check?
Can you hear me, everybody?
Hey, Greg, I don't think I just had a chance to tell you, but so I've got these guys trimming trees behind, so I'm going to be muted most of it.
Okay.
Was the only day that they could come, but
No worries.
I will put you want me to add this to the stream?
Yeah, go ahead.
All right. And we can just get started. Guys, if you have any questions or comments, obviously this is being recorded, but you can throw any questions or comments in the box. Greg's going to go over some tickers and some other stuff with the training, and we will just kick it off. Greg, I'll hand it over to you.
All right. Thank you, Ben. Everybody, welcome. Thank you. Really appreciate your being here.
Whoops, one sec.
Can you? Okay. So let's talk about what's going on. First off, last week, I apologize. We missed the show because there was a power outage here at my home. They're doing road construction out front, and I don't know if that's relevant or not, but I'm having a power outage about once a month for a couple hours is what's going on. And it just happened to come right before the show. So that, sorry about that. I have no control over that. I'm trying to figure out a workaround for that, but I don't know how to get around a power outage. So anyway, hopefully that will not happen again in the future at that exact time. Okay. Once again, we have to keep a close eye on Evergrand. I'm going to check on this with you every week because this has such potential implications for the US economy and stock market and really the whole world market and world economy. So we're going to keep an eye on this continually. Here are some of the latest headlines on Evergrand. It turns out that Evergrand did not default on their debt payment on Saturday. If they had done that, they would have officially defaulted, but they didn't, luckily. So that's good news. But the entire Chinese real estate sector is in trouble. Okay, they're all really debt laden, and there's no way that they're going to be able to keep up with that. And so the real question here is, will China bail them out or not? Yeah, I don't know. I don't know if they're going to bail them out or not. I think they will, but publicly they're saying they won't because they've kind of, gone against, said things against the Americans who have done that, and so they would kind of look bad if they did that. So they're not interested in looking bad to the public at all. And so they'll probably like secretly bail them out or something like that. But it's important that they do bail them out, or else it's going to be trouble. Okay. Here's one of the headlines. Other Chinese real estate companies are having problems and defaulting and so forth, and their stocks are plummeting, that sort of thing. So again, this is something we should keep an eye on. But until something happens further, we're just going to trade our market based on what the charts are telling us. Okay, so that's what's going on. This guy on YouTube, his name is, I think it's Tom Nash. If I can scroll down, hold on a second. Yes, Tom Nash. And this is a video, it's just an 8-minute video that talks about these issues with the Chinese real estate market. And so it's a really good video. I'd recommend you watch it. I really enjoyed it. Kind of has a salty language, but I'm sure we can live with that. Also going down, there was another video that was really good. If I can find it, let's see if I can find it quickly. Hold on one second. Just looking through. Anyway, I'm not seeing another video that I did watch, but this is a good one, worth watching. Okay, just kind of get a little education about what's going on in China. Okay,
Hey,
Yeah.
Greg, can you drop me that link so I can put it in the box? Someone's asking.
Let me see if I can get that here.
If you just want to throw it to me on Skype, I can put it in there. I know you don't have that.
Okay. I'll have to log into Skype. I'm not there right now.
Oh, no worries. Hey, we'll send out that link.
Okay. But all you have to do is go to YouTube and type in, "They are lying to you about Evergrand." You see this guy's face, it's Tom Nash, and you can watch this video. Okay. All right. Tesla. Let's talk about a
Tesla
Tesla
this
trade for
morning.
those of you who are signed up for the Options Accelerator program. This is a trade that we issued yesterday. It's probably too late to enter it right now. But that was a special trade that went out to our accelerator program. Okay, this is one of the things you get. You get extra alerts in the accelerator program. So a couple things happened 2 days ago for Tesla. Number one, they came out with good earnings, and number two, they let's see, who was it? One of the companies said that they were Hertz. Yeah, it was Hertz said they're going to buy 100 Tesla electric vehicles, and the stock gapped up on this day and ran up on heavy volume. So you can see down below that the volume on this was about 62 million shares, which is about 2 to 3 times normal volume. When you see that on a candle that's going up like that on heavy volume, big candle, gap up, running up all day, when you see that, what that means is the professional money is really jumping in on the stock. They're really loading up because they think prices are really good at these prices. What that means is it's going to tend to run up from there. Okay, and the stock is acting very typically based on this pattern and this situation. Okay, so we entered a credit spread where we sold. We entered it on this day. We sold it at the 1,000, and we bought the 990s. And this is a really volatile stock. It had a really volatile day, and it actually came pretty close yesterday to stopping us out, but it didn't. It quickly turned around and went up, and it's going up. I would expect it to continue to go sideways or up from here. I don't think, unless somebody, just decides to stomp on this, I think it's going to keep going up from here. Let's look at the 5-day.
What was the exit, or could you break down that trade? So you
Yeah.
said you had the 1,000 and the
So
990.
So it was right about, where was it? I saw it later in the day, so it was around here somewhere. I think it was about there that I saw it was going to keep running. I wish I had seen it a little earlier in the day, but right about there or there somewhere, I issued the alert, and it was to sell the 1,000 put. Just 2 weeks on this, expiring the 5th of November, and then buying the 990 calls. Yeah, it's a bear call spread, exactly. So that's what I'm looking at, and that's why on a really volatile stock, you want to put it way down below. So it was at least 20 bucks below where we issued it. So there's two ways to actually play this. You can either be kind of conservative and you make less money, but you hold to your stop, and then you pull you set the put that you sell really far away from the current price of the stock. That's one way to do it, and that's the way I'm doing it with you guys. Another way that you can do it, which is riskier, is that you put the call that you sell closer, but you're much more likely to get touched, and you let it ride. You do not use a stop. You just let it ride. That's a riskier strategy. It pays a little more, and if you're right, most of the time you'll make a little more money. But it's I don't recommend that unless you're a very experienced trader and can calculate the risk based on the likelihood of that happening. Excuse me. So we did not get stopped out. We're still in this trade, and it's looking good. It's acting the way it should. It's up about $30 on the day today, and all is well for this.
So for now, you're just sitting on that.
Yeah, for now, we're sitting on this. It's looking right. I'm actually gonna check the option price after I get off this call, and if it goes far enough and I make a quick enough profit, I'll just exit the trade early, even though it's only 2 weeks out. But as long as it's looking good, it's not going down anywhere close back down low, then I'm gonna just let this trade ride and go with it.
Hey, just to recap here for Frank, that trade was just recap that trade real quick. That was a 990.
We sold the 1,000 call.
Sold the 1,000 call.
Excuse me, the 1,000 put.
1,000 put, right.
And then we bought the 990 put. And there's something I want to show you. I took a screenshot of this at the time I did the trade. Okay, it looks like it was at a little higher, 1023.55. So I set the put that I sold $23.55 below where we entered the trade, and I still almost got stopped out because it was so volatile yesterday. Wow. Okay, but here's the thing that I liked about this trade on the entrance. First off, number one, I'm really familiar with this chart pattern, and it's one of my favorites. And at the time, the credit on this trade was right around $400, depending on if you want to give up the spread on the bid and ask on the two options. Okay, so it was right around $400, and the total max risk was only $600. So this is the kind of trade that you can kind of load up on a little bit more than normal, because the risk versus reward is so favorable, especially in light of this particular chart pattern. So if you want to not get stopped out and just let it ride, this is the good risk versus reward you want to have. A lot of these trades that I issue, the max risk, if it goes all the way to the worst that it could actually happen, is about 4 to 1. And that's why you don't want to let it go. But for a trade like this, it's easier to just let the trade ride, because your max risk isn't that much bigger than the credit. It's only 50% higher than the credit you're getting. Okay. But again, that's something we're going to go into in more detail in the seminar that I'm going to provide for the accelerator program. So you're missing out if you didn't sign up for that. Okay. Weird. Let me look at the comments real quick, see if there's anything. But what made you see this? Okay, so what made me see this trade? Let's go back. It's what I described to you. It's not the news that counts. It's the market's reaction to the news. And so no matter what the news is, when you see the market take off on super heavy volume on a big up gap day like this, I know from experience that this is something that's likely to keep running up. And it's really not likely to go anywhere close back down to around the 950 or 1,000 level anytime soon. Let me show you something about this day, yesterday, that was so volatile. If you're familiar with candles, let's go to the 5-day for this, for looking at yesterday. So this is today. These are 5-minute candles. And right here on the 26th represents what happened yesterday. The stock opened right here at the same price of the close of the previous day. It ran up hard for a little while, and then it sold off really hard. There are 2 reasons why that happened that I know of. I'm sure there are more, but these are the important ones that I know of. Number one, the market makers want to sell it off for two reasons. Number one, because they want to stop out some of the people who entered late in the day and put their stops too close. That allows them to buy at relatively cheap prices. So think about it right here and right down here somewhere. A lot of people got stopped out. Some people didn't even hear about the news until this morning, or yesterday morning, rather. And they were buying it at the open right around through here. And they all got stopped out because they were beginning to lose money. And they were thinking, oh my gosh, the stock is going the wrong way. I'm going to get out. So they took a quick loss. And it enabled a lot of the professional floor traders and market makers and so forth to load up on the stock, knowing that it's still going to go up from here. That's what's going on, because this is a very typical, repeatable chart pattern. Okay, that's number one. So that serves two purposes. It enables the market makers to immediately make money and load up on a stock that's likely to keep going up from here. Okay. So if you think about it, some of these floor traders who are wise to this pattern, they're loading up right here, maybe 10,000 shares. It would be easy for the floor traders on a stock that did 62 million shares yesterday, I think it was, to get 10,000 shares. That would be peanuts. And they would be loading up on this right through here. Some of them may have even sold off up here to lock in a quick, my gosh, almost $100 a share on, actually, wait a second. Down here, it's, below 9. So up here, you're looking at $100 a share gain within 24 hours, within 2 trading days on 10,000 shares. You're talking about $1 million profit for some of the floor traders on an easy, viewable pattern. $1 million. That's why they're on the floor, because they're making good money doing this. You see how that works? So how do you get wise to this pattern? Well, at some point I'm gonna issue a webinar on technical analysis, and it's this is based on 30 years experience. So I'm gonna offer that, and it's going to be a more expensive product than $300 because it's so valuable. But basically, that's something you can do right now. You can look at the volume based on news and a big move day. All right. This stock, let's go back to the 3-month pattern with the 1 day. Okay. So this stock, you can see, even right now for Tesla, they're buying it up off the lows from yesterday. We're higher than we are yesterday, and this is likely to continue. All right. So this is something you might want to take a screenshot of. Probability of being in the money over here is low, but we've got a great risk versus reward. So yeah, I like this trade. This is actually a good trade. You could buy calls or just buy the stock outright on this. Okay, so let's go back just a second. Let's go back to the potential of bad news coming out of China. Hold on, I got a question first. Based on Tesla's earnings? Yes, news is often based on earnings. You often see this chart pattern in reaction to earnings, but it could be any news. So the best way to learn this that I know of is to just go look at stocks. You can pull up any stock and see big candles on big news and go from there and look for how the stock acts after that. Yeah, let's talk about Home Depot for a second. Let me go back to them. Hold on one second. Let me find it. Okay, hold on. Okay. For those of you who are in the Home Depot trade, so Home Depot looked like right there. Can you see? I hope you can see the Home Depot chart here. Right here, Home Depot was starting to curl back into the Bollinger Bands. And so we sold a higher call. We sold a higher call and bought a higher call than that, thinking that Home Depot was going to go back down, at least for a little while. It didn't do that. The very next day, it blew right up through where we thought it would go. At this point, there's the only reason to exit a Home Depot trade is it would, if you do that, it would lock in your losses, the max loss, and we don't want that to happen. So the only thing you can do at this point is to hold on to the trade, allow it to hopefully come back down, but it hasn't done that. So we just want to hold on to the trade and hope for the best. But this is probably a lost cause on the Home Depot trade. Okay. So that one is just one of those losers that blew through our stop. And that's going to happen once in a while. Okay. Luckily, the Tesla trade is looking much better. Okay, so moving on. Let's say that things turn out badly in China, and for whatever dumb reason, the Chinese government decides not to bail out the real estate sector, or for some reason things start to whatever blow up in China. I want to show you what it looks like when the whole market is going to crash. This is the market, the Dow Jones Industrial Average. 90% of stocks or more are going to do what the Dow Jones Industrial Average does when it really picks up and moves in one direction or the other. You know, on a day like over these days when the market is going basically sideways, any particular stock might go up or down, but when the market really gets going up or down, that's the direction you want to trade. Okay, so what I'm about to show you is what most stocks did at this time. Now, this is, if you look at this chart, this is going back to February of 2020, right when the pandemic was starting to hit. So right now, the market looks fine, and it's going sideways near the highs. Okay, so no big deal, no big deal. Market's going down a little bit. Oh, look at this day. This is February 24th, 2020. Wow, what's that? The market gaps down and trades down all day on heavy volume. This is the same chart pattern I just showed you for Tesla. Okay, this is an excellent entry point for new trades going up or down. The Tesla trade was up, this one is down. Okay, so I wasn't watching the market that closely on this day. Okay, so I saw it later in the day and I thought, wow, look at that. I wonder if this is in reaction to the pandemics. Check the news, that sort of thing. I did not enter any trades on this day. Here's the next day. Whoa, big candle down almost the whole day, again on heavy volume, even heavier than yesterday. This is the day that it's telling you, confirming to you the previous day that this is a good chance this is going to run down from here. Okay, that the market is going to run down from here because we're seeing heavy volume, heavy selling, and a big red candle all day. Okay, we see confirmation of that the next day as well. Volume wasn't as much. If you're in the trade, you're thinking if it's going to bounce, it's going to happen right about here. Okay, so that was the 26th, and then this was the 27th, which I think is Friday, was a Friday. So if you had any doubts about it being a bounce right there, at the very, very, very latest, you should be opening bearish trades at the beginning of the day on the 27th. It's all down on heavy volume. There are no upward pressure on this at all on the entire market. Okay, so at the beginning of the day on the 27th, when you see selling pressure, I am going to be either selling short the stock, I'm going to be a bearish credit spread where I'm selling calls way above, maybe at the, if I open the trade on this day, probably at the 27,000 level. Or most likely, this is what I'm going to be doing, probably what you should be doing if you're options traders, is I'm buying puts that are at the money or a little bit out of the money. If you go a little bit out of the money, you can get a much better price if you really think the market's going to follow through. So let's say we actually did it right about here. Let's just for ease of purpose, let's say at the 28,000 level, we went way down on this day and sold puts around the 26,000 level. Excuse me, bought puts at the 26,000 level. And we're just going to let it ride. Okay, we get a bounce up. We're seeing if the market is going to bounce up to new highs. This is just a normal bounce. And over the coming days, that is just a tiny retracement. The stock bounces off the bottom of the Bollinger Bands. A lot of, big time firms use Bollinger Bands. And so you get a little bounce at the bottom and it quickly continues into a downtrend, confirming the downtrend on this day. So these are the subtle cues that tell you that the market's going to crash. And if you had done what that happened, what I'm talking about, you could have made some really good money buying puts because the market went all the way down to a low down here, 18.6. You would have made a lot of money buying out of the money puts over here somewhere, all the way down to here. So basically, if you see that chart pattern, I'm probably going to be buying puts or selling short the stock.
Hey, Greg, I completely let the time lapse. I told you I keep an eye on it, but we're 28 minutes in. Did you have some tickers you wanted to look at?
Okay, yeah. That's just wanted to show that to you. So let's look at some tickers now. Some potential trades here.
And this is our current watch list?
Yes. My computer seems to be freezing up a little bit. So let's exit some of these. My computer is really slow right now. I have too many windows open.
What's the first one we're looking at?
Okay, you might need to pull this up for me if you can, Ben.
Let me go. Let me pull up stock charts real quick.
Because I cannot open this. I'm going to refresh this. Maybe that'll help. Okay, much better. Here's a trade I'm looking at right now. Freeport-McMoRan. So right now, Freeport-McMoRan is bullish. And over the last about 2 weeks of trading, it's held support right here about $37 a share. So I'm thinking about selling a put for a bullish credit spread down around 36. I just don't think it's going to trend down below that right now. The fundamentals behind this are also pretty good because Freeport-McMoRan, which is a mining company, they're going to do well. Commodities do well when there's inflation, and we have inflation. So this is more likely to run up from here, and it's in an uptrend right now. Okay, so for those reasons, around 35, 36 would be a good place to sell a put. Okay, let's go into some others. For the same reason, we're looking at GDX, which is another commodities stock or ETF. Shoot. Once again, my computer is having some problems, so I can't show you the charts. I'm going to try to refresh and see if that'll fix the problem. Okay, good. Okay, again, GDX is in an uptrend just like Freeport-McMoRan. It's looking good. I'm thinking about doing a bullish credit spread on this. Probably sell the 31s. Depends on the prices we can get for it. Again, we're in the middle of earnings season, so we have to check. These are all stocks that have released earnings already. Johnson & Johnson, I'm watching because I think it's bouncing off. There it is. It's doing it today. It's bouncing off the top of the Bollinger Bands, and it is coming down below the 50-day moving average. So this is one where I probably would sell the 167.50 calls above, thinking it's going to go back down. Okay, or maybe even the 170. I think it's going to go back down from here because the long-term trend is down on this, as shown by the 50-day moving average. So that's one. Let's look at a couple more. If you have any you want me to look at, now's the time to put them in the comment section. 3M has already released earnings, and yeah, long-term downtrend, major resistance right about this price level over the last week or two. Probably would sell the 185 calls and buy the 190s or 187.50, something like that.
Are you waiting for something to happen there, or are you?
I'm just going to check a couple things on my own on it to see if there's something else driving it, but that looks like a solid trade right now, actually. Let me show you a couple others. Dow Chemical, basically same thing. Now is not a good entry point for Dow Chemical. It's in a long-term downtrend, but I want to see it bounce up to the top of the Bollinger Bands. It's at the bottom right now. So it's not a good time to enter. You won't make as much money if you say sell the 60 calls or sell the 62 calls, 62.50 calls, and then buy a higher call. You won't make that much on this right now. You want to see it up close to it and then start to come back down. So it's not a good entry point right now, but I am watching this for future reference. Facebook, want to look at Facebook and Visa? Okay, we can do that. Okay, Facebook is under a lot of pressure, as shown by the chart, because of the whistleblowers saying all the bad stuff about them. Doesn't bode well for the stock. Excuse me. So since it's in a downtrend right now, what I would want to see, again, same as the previous stock, I want to see it bounce up to the top of the Bollinger Bands or bounce off the 50-day moving average and start to go back down as an entry point to either sell short stock or to do a bearish credit spread. So if it bounces up to 350, I probably would sell the 360 call and buy the 370 call. So it's not a good entry spot. It's likely to bounce right here, I think. Okay, it looks like it is bouncing up just a little bit. We'll see.
That's a tough one. They're so in the news right now and not in a positive light. We may just wait for that to shake out.
Yeah, it's really better to wait and stock these trades. Just hunt them, just like a hunter, because we want to have the lowest risk, highest potential reward trade that we can do, and that's the right entry point. Now, let's say that you get downward momentum from here, which we might get. Look at yesterday, great big down candle on heavy volume. If I see continuation following through to the downside from here below 310, that's an entry point. I would probably enter that to buy a put or below, just buy a naked put, or to sell a call up here for a bearish credit spread. Okay, but at the moment, this is not a good entry point based on what I'm seeing. I want to see a little more confirmation of something because I think it's going to bounce right here. Now today, Boeing, McDonald's, and Coca-Cola are the three major Dow stocks announcing earnings today. I'm going to watch what the news is, how the stock reacts to their earnings announcements. Okay. To see if there's a tradable setup coming up on that. Tomorrow is Caterpillar, and on the 29th, 2 days from now, is Chevron announcing earnings. So these are stocks I'm going to be watching to how they react to their earnings announcements over the coming days. So really, that's all I have for today.
Let's take a look. Sorry, let's take a look at Visa and the Qs real quick, and then we'll recap the watch list. And right now, obviously, we're in Tesla. It has continued. Let's see. Yeah, Tesla's up almost $40. Tesla's good for now.
Yeah, Tesla's acting like it should, like I would expect it to. I think it's going to keep running up from here. But if you were looking to enter the trade, I think it's too late to enter the trade right now for Tesla.
Okay. Listen, there are a few questions. There's no name, but for YouTube user, that's a long dialogue, the conversation there. Why don't you email Greg and we'll get some specific questions going. I understand you're looking for a place to start and kind of understanding. Maybe we can come up with some content out of that, or a video that'd be helpful for everyone. So why don't you email I'm talking to YouTube user, that's the name. Email options@thetradersplan.com, and we'll see if we can kind of get that ironed out.
Yeah, that.
And if you're an accelerator member, you can schedule the one-on-one.
Yeah, we can talk short questions. I'm happy to answer in email if you have any questions throughout the day about these trades. If you want coaching, we're also offering coaching. That's a paid service. Okay, but in the meantime, you can email the questions to me. Let's look at Visa now. Oh, we are doing Visa. Okay. So Visa gapped down and it bounced off the bottom of the Bollinger Bands. Let's see, when did they announce earnings? Let me look real quick. They announced it yesterday. So this is in reaction to the earnings announcement. I want to watch this for a couple days because first off, the volume is normal volume, even though it did gap down. I want to see if it's going to bounce off the bottom of the Bollinger Bands. It looks like it is at the moment, in spite of the gap down. So I'm going to watch for a little while and see, and then I might enter a trade on this. If it starts to rally over the next 2 or 3 days, then I would probably do a bullish credit spread and sell maybe the 220 puts. Okay. So that's what's going on with Visa. There was another one in there.
Let's look at the Qs real quick and we'll wrap it up.
Okay. Yeah, YouTube user. I understand. I'll be happy to help you, and we can talk. Okay. Okay, these are the Qs representing the NASDAQ, and that is not right. Let's look at this. Hold on. Something's wrong with my charts. It's this one. Excuse me. Okay, here we go. Okay. This is one of those ones where it's resuming the uptrend. We're nearing the highs. You have no way to know if after the bounce off the bottom, if it's going to keep rallying and go up for maybe the next month, or if it's going to hit the top of the Bollinger Bands and come back down. Okay. This is just based on, 30 years of chart reading and experience. So it's too late. I don't see a good signal right now on the market, on the Qs. Okay. What I would like to see, again, just in general, if the market is in an uptrend, you see a pullback to either the 50-day or the bottom of the Bollinger Bands and start to bounce back up, there's your entry point. Okay. Or the opposite of that is also true. If the market is in a downtrend and it goes up to the top of the Bollinger Bands or the 50-day moving average and starts to come back down with confirmation, that's a good entry point. But for right now, I don't see a good entrance on the Qs. You can trade the Qs, or I'm sure they have options on the Qs as well. So if you want to trade it, you can. This represents how the NASDAQ is moving, but you can't trade the NASDAQ, the average. That's just an indicator. You can't actually trade that. Okay.
Okay.
Right, go ahead.
No, just helping you wrap up. So we've got a few on the watch list. You can keep an eye out for the alerts. If you have any questions, you can email Greg at options@thetradersplan.com. If you're not already subscribed to the channel, do so. You can get these replays sent to you. Let's see, Greg, do you have anything else?
Just that I'll look for alerts today. I've probably got one or two coming out today.
Okay, sounds good. All right, thanks everybody. We will see you next week.
All right, have a great week. Thank you.
Thanks, guys.
Bye-bye.